All right, everybody. Welcome to the Smart Money Closing Call. My name is Jacob Gabbard, and we do this every Monday through Friday, 3:55 p.m., except for on Thursday, we do it at 3:30. I'm sorry, Monday through Thursday. We don't do it on Friday. And on Thursday, we do it at 3:30 p.m. This is the Smart Money Closing Call with Invest with Jacob, and we go through the S&P futures, the NASDAQ futures, and then two stocks of your choice or futures or whatever. I don't do currency, so if you want to do like the dollar or something or the yen, I don't do those. But anything else you want to look at, we can. First two into the chat, get it done. It looks like today we're looking at TTD and ESTC, so we'll take a look at those when we can. When we're done here, on the left side of the screen, you have the S&P futures daily chart. Excuse me, actually, it's the weekly chart. And on the right side of the screen, you have the 5-minute chart. Weekly and daily are effectively the same since it's Monday, but let's put it on the daily. Poked a new low today on the S&P. Interesting. We'll get into all of it in just a minute. We're going to watch the last couple of minutes of the close and see if the bears try to take it down and close it at the lows, which would be a pretty big move from here, about a 13-point drop. I mean, I've seen them do it before, but seems less likely that they'll do that. Bears controlled the market most of the day. They allowed a couple bounces back up to the 76.80 zone, which was really important, and rejected that area. Bulls could not recover as of yet. They're still sitting just below 76.80, so we could see something into the close that presses up and allows after hours and into tonight get bullish. But as of right now, it is the Bears are in control until we see something different. We've got the 5 and the 8 right here. The 8 is actually supposed to be red, so let's get. Oh, that's the 21. It's not the 5. It's the the 8 and the 21. Actually, I think VWAP is the other one because my settings are wrong on this one. Yeah. Apologies. That is VWAP. This is the 21. I don't have the 8 EMA on this one. Bulls pressing on into the close. We'll see if they can get through these two things with a last minute and a half of the day. Very choppy day today. We had actually, Will, since you asked, Will likes to know if there were any day trades. There was no Pivot Point Pro trades, but we had a big release update on Squeeze Sniper that we're going to take a look at today real quickly. It's very powerful. We had a bunch of winning trades on that between the NASDAQ, the SPY, the Qs, some other stuff we had winning trades on, and we're going to look at that because it's really a powerful indicator. It's really doing really well. We're excited about it, and the updates make it super simple, easy to use, and you can use it on any future chart, any stock, any ETF, and it's really effective. So we'll go into that as well. All right, last 30 seconds of the day. They are flying around here. Looks like they're wanting to close on the lows or at near the lows, not on the lows. The lows are down here, but the lows of the 5-minute candle anyway. After sneaking back up to 686, they're trying to keep it back closer to the bottom of the day. 5 seconds to go. And there's the bell. All right, Bears win the day. NASDAQ down about another percent. SMH leading the way, and NVIDIA, part of SMH, of course, leading the way down 2.5% and 3% respectively. We went through those in our room today. If you guys are interested in what those look like, you can join our rooms at investwithjacob.com. All right, let's get to one big chart so we can see what's going on here, and then we will go from there. So we've had our supports here. They broke down. They made a new low today, so they got down below the 21, came back to the 8, and then today made a slightly lower low, but a lower low nonetheless. That's usually a win for the Bears, and they're closing below the 21, another win for the Bears. So this is, since they got below the 8, they've backtested it 1, 2, 3, 4 times. All 4 times have rejected, 3 of which below the 21, and now 2 out of 3 closes below the 21 with a lower low. Those are wins for the Bears. A lower low is a win for the Bears regardless of how low it is. They were able to find not only a lower low, but also not give up a higher high. So a lot of times if you get a lower low on a day, that can be a bottoming day, and then you see something like this. We didn't see that today. We saw a lower low, a few bounces, but for the most part, the bears kept everything down under the 21 where they wanted to be. The 21 sitting at about 76.80, which is what I was talking about being a pretty key level for the bulls to get back over, and they just could never sustain anything over that level. So we'll see how they progress overnight. As we look at the counts, the bears are starting to make this a little uncomfortable for the bulls. They have broken down below this high. They have now made a back test and lower low, which tells us that more often than not, they're going to come into 76.20, which is the next major support zone down, and about 50 points down from where we are now. And then we'll see what happens next. So this area should produce a bounce. I don't think we're going to come into this area and just blow right through it. However, it is very possible that that happens. I don't think we will. I think we'll at least get a small bounce, and then if they're going to continue, they continue. This is a pretty wide, strong support, and I would expect it to produce at least a little bit of a bounce. You know, even if it's just a midday 20, 30 point bounce, I just don't expect them to hit 76.20 and roll on through. Unless they're trapping, you know, if they hit 76.20 and come down to like 76.10 or 76.01, whatever, and then do that. That would just be essentially running a trap of that zone, and would allow them to liquidate a bunch of late shorts at that time. So I do think that we are likely coming down to 76.20, whether that's today or tomorrow, or I'm sorry, tomorrow or the next day, or even later in the week. That's to be determined, because it's certainly not impossible that we do this first and back test this breakdown at 77.50 and then come back down and do that. That would be a very common pattern to see. And this is why we look for things like acceptance. We look for key levels that we would trade off of. And with Sniper, you get all those. It's really cool. And then you look for certain patterns that happen at those levels. Again, with Sniper, you get all of that. And those things are what tell us if price is going to continue or if price is going to fold to the downside. So for the ES right now, given that they made a lower low and where they closed, I would expect them to test 76.20 before they break out to any kind of high. And if they lose 76.20, we are on our way down in a very rapid fall to 73.30 or so. Through 76.20, and the market should start accelerating to the downside. There's not a ton of great supports after that. While there are supports, they're just not ones that, once the market is coming off of a failed breakout, are going to hold. For instance, if you look at this, we talked about this being a miniature version, this miniature range up here of this bigger range. When they failed the breakout of the miniature range, you can see they went straight down in 2 days to the bottom of the range, 2.5 days to the bottom of the range, and through it. Now they're threatening to create a failed breakdown of this range, and they're back into it, and assuming they fail to the downside, that will accelerate to the bottom of the range very quickly, and they kind of blow through supports when that happens. So I would not be looking for much support if we break through 76.20. If they can hold 76.20, or even today's low, two very decent areas, we could see a bounce. The first place they got to get back through is 76.95 and 7,700. That little 5-point zone right there is very important. It's basically this prior high, and would say that they can, get back into the range and then explode back out of it. You want to see a little momentum if they're doing that as well. And then the bottom of the upper range is right around that 77.50 zone. Technically, it's right around 77.30, but I think 50 is where they got to get through to really fully say they're back in. And if they do that, then they're probably going to press on 7,800. Through 7,800, we're off to 8,000. So there's several key levels to the upside, only one to the downside. 76.20 to the downside. To the upside, they got to get through 76.95, 76.50, 7,800. All right. Any questions on the ES? R. Smith, welcome to the stream. Happy Monday to you. Myth, I think you're a little bit late today on yours, so no Berkshire for you. We'll talk about trades in a minute, and we got some other trades on there. Off.com, welcome to the stream. Bantana, welcome to the stream. Will, welcome to the stream. And R. Smith. All right, guys, let's go over to the NASDAQ. NASDAQ got beat up a little more today, making lower lows. Closing below these lows is not a great sign for the DAQ. And that was a big support area to get through. They held it twice. Today they got through and closed below it. This should create acceleration on the NASDAQ down into 28,735. And then from there, we'll see if they can break through. But I suspect the NASDAQ is heading down toward the bottom of their zone at 27,200, assuming they can break through this 28.7 area. There's a little bit more at 28,550. This whole zone right here should be considered support. So if they get through 28.7, it's certainly not double down on the downside. It's wait and see if they get through 28.5, and then they should start accelerating again to the downside very strongly. Again, wouldn't be shocking to see a little bounce here first before they do that. I'm not saying anybody should be long or trying to catch that bounce. I'm saying if we are green tomorrow, don't be like, oh, the bears are dead. That's certainly not the case. To the upside, they got to get back through these lows that they just broke down from 29,250. They were unable to do that today. And then they got to get through the big level up here of 30,000. 30,000 is the level on the NASDAQ that opens the door to the new all-time highs. If they can get through that, also, obviously they still got to get through the high, but 30,000 is the level they rejected. They rejected it over here. They rejected it here, 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 here. So they got to get through 30,000 and sustain it. If they can do that, we're on our way to highs. That's what we're looking at on the NASDAQ. Right now, in the short term, meaning the next days to weeks potentially, the bears are in control of the market. Unless we start breaking above those key levels to the upside, then the bulls will take back control. But for right now, unless they fumble, the bears are dictating price. Any questions on the NASDAQ? Next few weeks are going to be interesting. I agree, especially as you get into late August, early September in midterm election years. Seasonality tells you it's nasty and usually very bearish. So I would be looking for follow through from the bears more often than not. Remember, seasonality isn't something to bank on, but it is a probability statistic that says more often than not in midterm election years, September and October are very bearish. So probability tells us to be looking for supports to fail and resistances to hold during that time. Always try to be on the right side of the market and the market's probabilities, because that's all trading is a game of probabilities. And if you understand that and can handle that, you'll know how to set your risk and be on the right side of trades more often than not, and be on the running side of trades. Because in a bear market, can you catch this 2-day move up? Yes, but wouldn't you rather catch this 20-day move down? Right? You can catch the right longs and still make money in a bear market on the long side. But the short side is where you want to be in the bear market because you can get the runners that keep going. And the long side is where you want to be in a bull market because you can get the runners that keep going. It's not to say you can't make money in both directions in both markets, but in general, you're going to have way better success being on the side of the trend. Okay, we got 2 stocks that you guys came up with today. We got, what's the first one? ESTC. Let me see what that one is. I might be familiar with it. I don't know the symbol off the top of my head, though. ESTC. Elastic Nevada? NV. Elastic NV. Ooh, danger time on theirs. They're at the 8. So they do have actually pretty good potential here. Let me see the whole deal. There's your low. So I would have liked to have seen a lower low than 40 because this has the look of a 3-wave move up. You have a micro 1 wave here, like 1, 2. I guess you could be like 3 of 3, 4 of 3, 5 of 3, 4, 5. That would be okay. So I guess you could count it as 5. I would like the wave 1 to just be a little bit longer is all. So this could technically be wave 2. And then this is not a terrible, it's not great, but not terrible wave 1, 2. And then they're starting to build this setup here. So they're trying to build what looks like a 1 of 3. If you're looking at that, you want to look for the 618.5 area. They're at the 236 roughly, so they should be targeting around 122 to 140, or I would say really, since it's right in between these two, this resistance right here at 130 or so. Remember, wave 1 of 3 takes us back into resistance and fails. Wave 2 of 3 pulls back. Wave 3 of 3 comes up into resistance and chops, usually in the pivot. The pivot happens to be right under the highs of here. So you look for them to chop over here, and then they break out. It's all rooted in price action. So they come down. They've got an okay setup here. I like the 1-2-1-2 with 3 of 3. So I would look for them to pull back a little bit here and give us a 4 of 3, 5 of 3, 4, 5, something like that for a wave 1 into the 122 area. There's a lot of resistance right there. And then we'd look for them to pull back correctively and set up for the move. Now, as I said, this is not the best first wave ever. So I would not be shocked to see this playing out as an ending diagonal for C that has lower to go, maybe down to the 764 at 25. They have to get above this 95 area to really, technically, I guess they can come all the way back up to 119, but getting above 95 would be a very big feather in the bull cap. They could certainly retrace back up to 140 and fail. That's actually not the correct fibs, though. Let me get the correct fibs for that. They could certainly trace back to 133, which is this peak right here, and fail. That is the 618. That would probably be my primary on this, is that it's a bearish count that's going to fail up around this peak. But that's going to be a decision point, right? Because if they get up there and it looks like a 5-wave move, that's the 0.5618 extension. That's where you look for wave 1 of 3 to come into. So you're looking for a pullback in both the bullish and bearish count here. If it looks like this, then I'd be looking for this. But if it's a more impulsive straight down move, then I would be looking for them to come down to 25 and break this low and reset on this chart. TTD might be dirt. If it might be, it probably is. Yep, it's dirt. No interest in this one there at major support. If you are I would want to see acceptance. So there is interest here actually in the sense that if they gave me, let me see what we got down here. Okay. All right. So here's what I would say. If they come back up and touch this line again, I would be able to get long for going to 16. So that's 1450 roughly, 1460 up to 1678. So about $2 on a $14 stock's pretty good. That would be the first target. So if they do get back above this line, or all they got to do really is touch it, I'd set my stop down here below the low. And then you have a minimum target of 1678. And then if they can start to run, they can get up into 19 and so on and move higher. But there's no structure to build off of yet. They're absolutely collapsing. They're at critical support here. If they lose this support, they're coming down to 10. If they lose 10, they're coming down to 850. So until I see something else, this is bearish. But if they come touch that line, that would be considered without breaking the prior low. Let me be clear about that. So what you're looking for on these types of things is they break support. They set a low, they come back to support, or now is resistance. They fail, but don't take out the low, and then they come back here. That tells you people are accumulating, and price wants to be here, not here. Price wants to be up, not down. So always look for those types of things if you're looking to set up a trade in the opposite direction of the trend. There's no sense in shorting here because there's nothing to short. It's already happened. They've already lost 1,000% of their value or more because they got smoked. From 140 down to 13. Again, 90% drop on this one. Guys, this happens all the time, and it can end. Maybe not 90%. That's going to be big. But it can happen on the ETFs as well. Don't think that just because they're an ETF, they can't drop 90% or 60%, name a price. But they blew through this support, and they came down to their next support, and now they're kind of blowing through it so far. If they can't hold, they're going to continue on down. But they're pretty much dirt. You're correct. Okay, we're going to look at Squeeze Sniper real quick. So we had a huge update today. Let me take this black line off because I drew that. Let me take everything but Squeeze Sniper off. So what you're seeing here is our trade log. I have it fairly big because I can't see crap. And I like to be able to see the numbers pretty easy. And so what you see on the screen here, this is for the ES. We didn't have anything on the ES today. The green lines are where we're looking for trades. Those are critical levels to trade off of. And you can see when they got to the green line here and swept it, we did get a really nice run up. However, they didn't give us the pattern that we're looking for. They didn't give us the acceptance pattern. You don't have to get the exact pattern, but if we don't take it because those fail quite often. And so you can see when they came down to the green line, that was the level we're looking to trade. That's where you know to start looking, hey, are we going to get a trade here? And we didn't get, like I said, we didn't get the setup we were looking for, so it didn't fire a trade. But you can see the first 3 trades, it's done really well. We had an SPX trade today that did fire, and it was a one-time winner here for $4 realized profit for 4 points. I guess I should say not bucks. Again, they came back up into the green line, and we were looking for a trade here, and we got it. Got the 8-point move on that. The Qs, I think, also had a one-time winner. Yeah, they came back into the green line, gave us the setup, exploded off of it, gave us the winner there. They didn't make the take profit 2, but that's why we take 75% at take profit 1, because we are looking for the minimum move to happen. And then once the minimum move happens, the failed breakdown has fulfilled itself and it can collapse and fail again, which, it did. But if we take 75%, we can come all the way down and still make money. So winner there on the Qs, and I'm sure there were others as well. Those just happened to be the ones that I saw. So very, very intuitive. It comes up. You can put on alerts to say, hey, we got to the price target. We should get a trade. Or we should be looking for a trade, not we're going to get a trade. Just because it gets to price doesn't mean you're going to get a trade. And then once you get the setup we're looking for, you get the trade. It tells you exactly where to enter, exactly where to stop, exactly where to take profit 1 and 2. And then you keep a 10% runner, because in case you get a day that just loses its mind and goes up forever, you have exposure to that. And then it logs the trades for you. So we're really happy with it. It's done really well, and it's really easy. The bugs, I think, are pretty much worked out. I haven't heard of anything yet. We've had lots of people using it today with the new update. I'm going to leave it at $77 for the next week, and then price is moving up on this. So if you guys want to get it, now is the time. The updates are out. The bugs are great, and or the bugs are gone, and it's working really, really well. So hopefully you guys are enjoying it that have it, and you guys that don't, you're going to want to be part of it. It only has the first few trades on the log because these green lines are dynamic and it can't recreate them 10 days ago. So the key support levels are created based on the price action of the prior couple of days. And if there's already all this price action in both directions, it can't go back and recreate the trades 20 longer than a few days ago. So the trades will always log once you have it on your screen. For as long as you keep it on your screen, they'll keep logging the trades all the way back to as far back as the 5-minute chart goes. So it can only go back to 3.5 months ago. So as far back as the 5-minute chart goes. So as we go forward 3.5 months, this thing will fill up with all of the trades for the next 3.5 months. And then at that point, some trades will start to fall off because the chart no longer has the trades on them, if that makes sense. They just kind of fall off the chart because TradingView only gives you so many bars of data. So anyway, that is that. So if you guys are interested in that, check it out. The link is in the description down below. We'll be back tomorrow to do this again at 3:55 p.m. right at market close to see if the bears can continue to follow through or if this is going to be where the bulls finally step in. All right, have a great night, everybody. Let me make sure there's no questions. Green line, what flag marks those lines? I have no idea what you mean by that, but the indicator marks them there, and they're dynamic, so they'll change tomorrow when at 6 o'clock, when the futures market reopens, there'll be new green lines for whatever lines matter. Thank you, R. Smith. I appreciate that, and thank you guys for being here. We will be back tomorrow. Have a wonderful evening.